5, Dr. Russel Norman.
Thank you, Mr. Speaker. My question is to the Minister of Finance and asks, has the Treasury underestimated the forecast lost profits to the Crown from the sale of state-owned energy companies in light of Mighty River Power's enhanced earnings and dividend announcement?
The Honourable Stephen Joyce.
Mr. Speaker, on behalf of the Minister of Finance, no, I don't believe so. The nature of New Zealand's electricity market means electricity wholesale market conditions that are positive for one company, in this case Mighty River, are likely to be negative for other companies, including possibly some energy SOEs. This is due to rainfall patterns. South Island lake inflows, for example, this year are low, increasing the electricity wholesale price. On the other hand, inflows into Lake Taupo and the Waikato River are about normal. Mighty River would therefore expect to benefit from a higher wholesale price and normal generating capacity. Other companies would be negatively affected by the same weather pattern. Overs and unders like this are a feature of New Zealand's electricity generation system.
Dr. Russel Norman.
Thank you, Mr. Speaker. Has the Minister of Finance read the table on page 6 of the Budget Policy Statement 2012, which indicates that the cost to the Crown per year in 2016 as a result of the privatisation will be a loss of $360 million per year in lost profits to the Crown?
The Honourable Stephen Joyce.
Mr. Speaker, on behalf of the Minister of Finance, I'm sure he has seen that table, but the reality is, as the member knows, that there is a number of unders and overs involved in the transactions, and they become out broadly equivalent over the forecast period.
The Honourable Clayton Cosgrove.
To the Minister, in light of the increased profitability of Mighty River Power, what guarantee can he offer that this asset sales program that he's proposing won't widen the Crown's deficit by more than at least the $100 million a year he's already admitted to?
The Honourable Stephen Joyce.
Mr. Speaker, I'd refer back on behalf of the Minister of Finance to my answer to the primary question. I think the member is drawing too much from this particular single announcement.
Dr. Russel Norman.
Thank you, Mr. Speaker. Has the Minister read the table on page 6 of the Budget Policy Statement 2012, which indicates that the foregone profits as a result of privatisation will be $360 million a year, whereas the estimated finance cost savings will only be $260 million a year, and hence the Crown will be about $100 million a year worse off?
The Honourable Stephen Joyce.
Mr. Speaker, on behalf of the Minister of Finance, I'm sure he has read that table, and again I think the member needs to look at the other unders and overs in relation to that table.
The Honourable Clayton Cosgrove.
So, Minister, doesn't the improving profits from the energy SOEs prove that Treasury was indeed right when it said that these companies were already operating efficiently under Crown ownership? And what would change under his privatisation agenda other than the outflow of at least $100 million in profits per year flowing offshore?
The Honourable Stephen Joyce.
Mr. Speaker, on behalf of the Minister of Finance, the profits aren't flowing offshore, and we could expect further efficiency improvements over time. And no, that's not correct, Mr. Cosgrove, because we have stated in answer to an earlier question that it's 85 to 90% being held in this country, including the government's 51% share.
Dr. Russel Norman.
Thank you, Mr. Speaker. Has the Minister of Finance read again the table on page 6 of the Budget Policy Statement 2012, which says that the net decrease in operating balance before gains and losses will be $94 million a year as a result of the privatisation program? And does that not mean that the government will have $94 million less per year in 2016 as a result of privatisation?
The Honourable Stephen Joyce.
Mr. Speaker, my answer remains the same on behalf of the Minister of Finance. I'm sure he has read the table, and the member is aware that there are a number of unders and overs in relation to those calculations which are clearly stated in the table.
Dr. Russel Norman.
Thank you, Mr. Speaker. What are those unders and overs?
The Honourable Stephen Joyce.
Mr. Speaker, on behalf of the Minister of Finance, I don't have those tables with me, but I would point out. Well, if he's quoting page 6, he will know those. He doesn't need to ask me firstly. But also, again, the transactions that the money is obtained by the Crown and then progressively spent on the Future Investment Fund over a number of years.
So is this Dr. Russel Norman?
Thank you, Mr. Speaker. Does he think it's a smart way to run a budget to sell something that's earning total shareholder return, according to Treasury, 18.5% per year, in order to avoid debt, according to Treasury, of about 4% a year?
The Honourable Stephen Joyce.
Mr Speaker, on behalf of the Minister of Finance, I'm sure whether you buy or sell anything depends largely on the price, and I'd point out that the government is talking about selling minority shareholdings in these SOEs, and so for the member to make that suggestion without any reference to price suggests that he's actually operating on a philosophical view rather than on any sort of economic view.
Dr Russell Norman.
Can the Minister of Finance tell us whether the return on these assets is greater than the cost of government borrowing?
The Honourable Stephen Joyce.
Mr Speaker, on behalf of the Minister of Finance, I think the member should be reminded in terms of his opening question, where he was talking about the variability of earnings in these companies. And that is the reality of the situation. So you actually can't judge that forward-looking. You can make an estimate, but we are confident there will be a net positive for the New Zealand government of selling those minority shares and have the benefit of strengthening New Zealand's capital markets and have the benefit of strengthening the accountability and performance of these companies over time.
Point of order.
Point of order, Dr Russell Norman.
Mr Speaker, it was a very clear and simple question. The Minister talked about many things. He did not compare the return on the asset versus the cost of government borrowing. That's the substance of the question.
Well, I accept that the Minister's answer was not as straightforward as the member's question, but perhaps the question is not capable of quite such a straightforward answer, because what the Minister said was if you project ahead that the variations in return and the variations in cost of capital mean it's difficult to predict which will be the greater, I think was what the Minister indicated. He concluded, if I recollect correctly, though, that it's the government's belief that they will be of similar magnitude, I think was what the Minister indicated. Now, if I'm wrong on that, the Minister had better correct me, but I accept that wasn't exactly as simple as the question was, but then I think one has to accept the question sounded simpler than it really is. As one projects these things ahead, there is significant variability, and I think that's what the Minister was pointing out in his answer.
Supplementary.
Supplementary question, Dr Russell Norman.
If the return on this asset may be actually less than 4%, the cost of borrowing to the government, why on earth would anyone buy one share in this company?
The Honourable Stephen Joyce.
Mr Speaker, well, the assessment on behalf of the Minister of Finance, the assessment as to who will buy shares, of course, will be made at the time as the share offers are made. But again, the projection forward of the income for those companies will be one of the factors in determining not only the number of offers but also the price. And the member seems to be operating completely devoid of any consideration of price, which seems a rather strange approach to take.
Question number 6, Mike Sabin.